Hey, my name's James Dixon. Welcome to my channel. This is a monthly feature that we do where we talk about the property news and what is going on in the market. Well, what a month. What a month it's been. First off, if you're a property investor, I'm sure you've been riding these highs and lows thinking, what is going on? What has been going on this month? So I'm going to cover all of those this month. Stick around for my opinion, and I'd love to know your thoughts as well, so do comment below. But quickly, before we do start, do quickly like this video, guys. That really helps me with the YouTube algorithm. And also subscribe and hit the bell notification. There's so much going on in property right now. There's a lot of opportunity as well. So I'm going to share with you what we're doing in our business, and maybe that can help you along the way. So I think the biggest news that we can talk about this month is something that happened earlier, which was the mini budget. I mean, that feels like it was so long ago. So we've had two prime ministers in this month, right? And so the mini budget happened and was an absolute calamity. It totally destroyed the markets. They voted with the prices and crashed the pound. And that meant that we had a new prime minister. It meant that we had multiple U-turns and just so much uncertainty, right? So much uncertainty. Now, initially, it was predicted that the base rate, the Bank of England's base rate, would go as high as 1.75% by the end of next year. Now, during the mini budget, the predictions went that the Bank of England base rate would go as high as 6.25%, meaning that you would be paying a rate on top of that of around 8, 9 or 10% for your mortgage. Now that would mean for a lot of buy-to-let investors a huge amount of stress, because if they were on a deal that could have been as low as 1%, came off a deal when it was 10%, their payments would be 10 times as more, 10 times as much as they have been, which would just mean it would be absolutely impossible to sustain that portfolio. And so they would have to sell, right? They would absolutely have to sell. That would crash the economy. That would mean there would be so many uninhabitable places that will be taken off the market. It will be absolute chaos. So that couldn't happen. So Rishi Sunak came in, and now we currently sit at 2.25%, but that's going to change. By the time you watch this, maybe that's already changed, right? It's going to change in November for sure, right? Now, I think that we're going to go to 3%. You'll know probably by the time we've recorded this. I'm pretty certain this will come out after that. So you will know what that will mean. But that mini budget was an absolute disaster for homeowners, investors, and everybody else. And thank God that Prime Minister and Chancellor are gone. We've got someone new. I don't know if they're going to do a good job. You don't know really either. But let's just see how we get on, right? Now, the predictions for where the interest rates will peak have come down significantly since then, which is really positive news, I find. So the mini budget was a big thing. Now, house prices. What happened with house prices? Well, in the house price market, we actually had our first drop for 15 months. We had a drop, according to Nationwide, of 0.9%. Now, we haven't had the Halifax data yet. We haven't had the land registry data yet. But Nationwide's pretty good. And they're saying that the house prices dropped 0.9%. Now, they went up 0.9% in September. So it's close enough to being even to where we were in September. Obviously, it might not be exactly the same, but it's close enough, right? So it's not a crash. Now, I've made a video and I put my neck on the line here. I'm stating that the property market will not crash in 2022. So do go and check out that video if you want to see why I believe that. So that's important to understand. So the market has started to go down. Who knows what's going to happen? There's still a lot of deals going through the pipeline at the moment that they were offered mortgages earlier in the year when interest rates were low, and they're just working through and completing at the moment. So that's going to mean there's going to be a bit of a lag in the data. So house prices have gone down. So what's going on with demand? Right? Is there any buyers out there? Well, the market, the demand The buyers in the market has dropped 30%. That means that rather than having 10 people looking at a house, you might only get 1 or 2 now, right? And that means that you're not going to get so many offers. And so definitely the market isn't going to have some super tear off and go really fast up for the next few months for sure. So demand is also down, and stock has been taken off the market as well to a similar amount to that. So that means that there is less properties for sale. Now, why are people doing that? Well, the belief is that they're doing that because they're not having to sell. So it's a wait and see approach. So they've taken the property off the market because they don't want to get low offers. They just want to see what is going to happen in these uncertain times. Maybe they've got a low rate, and if they sell, they're going to have to get a new mortgage on a higher rate. So maybe that's put them off buying and selling their property. So that's a consideration as well. Now, first-time buyers are pretty much out the market at the moment. And that's partly because mortgage products, a lot of them got taken off in the last 6 weeks, and they're coming back on, but at a slower pace. So a lot of first-time buyers, they didn't have that option to get a mortgage, and so that's put a lot of them off or made them have to wait and see what is actually going to happen with that market. So that's another consideration. And these are part of the people that are out the market. Part of the 30% is those first-time buyers. So what's going on with the stuff that is for sale? What is for sale? Well, 25% of it is reduced. 25% of the stuff on Rightmove is reduced. Now that sounds like a lot. It is a lot because we haven't seen that kind of reduction for the last few years, have we, guys? If we really think about it, it's been such a buoyant market for the last 3 years that not many people needed to reduce the value of their house in order to sell it. Now, 25% does sound like a lot, but what Rightmove is saying is in a normal time, on average, it's over 30% that are reduced. So we're not there yet. We're not even at the average yet. And this will be different in different areas as well. Of course it will, right? So what we're saying is at the moment, not all of the properties are reduced than what we would have at normal times. It's because a lot of people are picking up on this and saying, well, 25% of the properties are reduced. Well, yeah, that would be normal in 2019. In fact, more of them in 2019 were reduced. 30% of them would be reduced in normal climates. So that will change. More will get reduced. And maybe we'll get to 35% of the market will be reduced in the next few months. You don't know for sure. I don't know for sure. It really depends on what happens with these interest rates and with inflation. So what's going on with inflation? Well, it's not going anywhere, unfortunately. It's currently still at 10%, which I think is slightly up. I think we were 9.5% before. So that can be good for you as a property investor. So if you already own property, then on an annual basis, the buying power of the debt that you owe is less. So if you owed 100 grand, then next year the buying power of that 100 grand will only get you 90 grand worth of stuff. So that means the debt is less powerful than it was a year ago. So those that have lots of debt, inflation can actually be a good thing. Now, what's going on with the rentals in the market? Well, this isn't great news, but I think it's £1,161 is the average cost of rental at the moment. That's a big chunk of someone's salary. And I just think that that's not sustainable to keep going up. And also, as a landlord, as an investor, you've got to be cautious by just raising it up. So here's what I'm doing. If I've got an established tenant and they're good and they pay the rent and I want to keep them on, then some of them I have put 0% interest, a zero rise in this year, and made it very clear that's to help them get through this difficult time. And that means that they're going to be more loyal. They're going to make my bill more of a priority. And so that's one thing that I've done. Now, if a property becomes vacant, then I will put it out at the market price. And we've just done that. So we just purchased a new property. So my oldest daughter, Georgia, we purchased a new flat in Dorking. When we got that valued in the summer, because that deal took months to go through, like ridiculous amount of time. When we got it valued, the surveyor said that we would get $950 rent tops, absolute tops, and you wouldn't even get a pound more. You struggle to get $950. We actually got £1,100 rent. Right now, with that $950, that actually meant that it was a kind of down value, and I had to top up the deposit a little bit, which I was a bit frustrated with at the time. But looking forward, we got $1,100 rent, which is pretty good, right? And so on new tenancies, we are putting out a market rate. But existing ones, where we can, we are making sure that we treat people fairly, and that will get us loyal tenants. And that can be the right thing to do. Don't be a greedy landlord, because if you start putting up the rent, imagine you took someone's rent from £800 to £1,161, then they might not be able to pay you. So that's a consideration here. So let me know your thoughts. What else have I missed? What else has gone on in October, November? I'd love to know your thoughts and comments. Do comment below, guys. It's really important. Do like the video. That helps massively with YouTube. Subscribe and hit the bell. Check out all the other content. And last thing is, I'm going to be running a live event in London, and I want you to come and join me in the room, because this is the opportunity of a lifetime right now. Property prices are dropping. Opportunities are there. Landlords have got to set up their portfolios because they bought in their personal name, meaning that you can grab some incredible deals. It really is the chance of a lifetime at the moment. And so I want to invite you to join me in London. How you can do that is put your details in the VIP list. There's a link in the description. You just click on that, fill in your details, and you'll get all the details on that live event. And you can come and join us in London and spend a day learning this property investing stuff. Do check out all the other content on my channel, including this video right here. Thanks for watching.